So in this video, we're going to talk about the 7 top investment plans for senior citizens in 2024, so stay tuned. So I was recently vacationing with my family and I had my elderly mother with us, and we talked a lot during this trip because we spent a lot of time together. And she was just like, hey David, you know, I've got this, these investments, am I doing the right thing? And going forward, what are some of the things that I should be investing in that you've heard of, David, because you're in the financial industry? I thought that this would be a great video to kind of discuss different investment options, and I've come up with 7 specifically tailored to what I think senior needs are, and specifically for my mother. So I kind of wanted to share this with everybody today. We'll just consider these 7 investment buckets, okay? So as long as we have these investment buckets, it's a great thing. Number 1 is fixed deposits, something that guarantees returns, okay? Something that's safe, like a savings account, like a CD, where you can actually put money in and you can be guaranteed a certain amount of fixed income that comes in based on your investment. So when you put deposits in with a bank or a lending institution, what they're doing is they're taking your money and they're lending it out for a little higher rate, but in return, you don't have to deal with the risk, and they're gonna give you a certain interest in return for your investment and the ability to kind of use your money. So definitely look around. There's a lot of like banks and credit unions and even online depository institutions that give you specific teaser rates for deposits, and based on the amount of deposit, you may even get a bonus, you know, for this. So it's really important to kind of look around, see what works for you, how long you're willing to tie up your money for X amount of return. Number 2 on the list is government bonds. Government bonds are great products. They're issued by the government. They have typically a higher interest rate of return as compared to fixed deposits. And the government bonds provide you with security and a steady stream of income that really makes it extremely attractive for seniors. So if you don't have a guaranteed thing that you feel comfortable parking your money in, government bonds would definitely be my number 1 choice, because, you know, it is backed by the government, not FDIC, because FDIC only insures up to a certain amount, and above that, you know, you're not really insured for it. So, you know, diversify, make sure you put different monies in different places. And I think with you looking into these 7 different things, the more you diversify, the more you really just need to start taking like detailed notes as to where everything is, the account numbers, so on and so forth. So if you ever got into a situation to where you don't remember where all your money is, you have something to kind of like, you know, break in case of emergency. Moving into annuities is number 3. It is a great way to kind of leverage your money with a little more risk, okay? So annuities are basically long-term investment contracts that guarantee regular income. The best way of putting it. With these products, they do provide a little more financial security than some of the other products that we're kind of getting into. So I'm starting with the least amount of risk, going into the most amount of risk, and it can be customized based on your individual need. It's not one size fit all. You know, you may like certain sectors, and these annuities can certainly help you out. They're definitely a great choice when it comes to seniors looking for stability and a peace of mind. It's managed. It's just a really good product to kind of put your money into. Something that I personally have started doing already, and I really do enjoy doing this, and I've kind of started teaching my kids about this, is investing in high dividend paying stocks. Dividend paying stocks are like your blue chippers out there, right? Like your energy companies, like the IBMs of the world, a stock that has been around for a long time, and part of their return on investment is a dividend. A dividend can get paid out in a bunch of different ways, whether it be you know, quarterly, whether it be every 6 months, whether it be every year. But it's a dividend that's kind of guaranteed at a certain period of time at a certain rate, and it also, you know, puts part of your money kind of at risk, right? You know, in the market, but more risk, more return. So let's say you lucked out and you bought Tesla when it was super low, maybe 5 years ago. Now you're not only reaping the benefits of dividend, but you're also reaping the benefits of the appreciation of the value in the stock. So a little more risk. The next thing that has taken off in the last couple years is, and I would say taken off because I remember as a kid when I would see the gold prices, they were pretty low. And I remember as a really young kid, my mom bought me a 24 karat gold necklace. And at that time, it was $800, which was unheard of, right? You know, it was just a lot of money. Now $800 really doesn't give you that type of necklace. The necklace was fully solid gold all the way around. It was heavy to the feel. I remember recently we had to shop for gold for a wedding, and when we were shopping for it, $800 in my hand felt like a hollow chain, and there was no substance to it. With that being said, that's a good thing for gold owners. That means gold has appreciated, and it's something that, you know, regardless of what your belief is in the monetary system, it's something that is always going to have some sort of value, whether it be a gold bar, whether it be a contract on gold, whether it be an ETF, which is a almost like a fund of companies, of gold companies, and you can buy into it. Gold basically hedges against inflation and economic uncertainties, so gold is a very good investment. Mutual funds have always held a really special place in my heart. I really love mutual funds, and there's Class A, B, and C mutual funds. I'm not a licensed financial advisor, so I can't really dive deep into this with you. What mutual funds are is a fund, which is basically a group of stocks or assets or annuities that are managed by a fund manager, okay? You trust this person, and growing up, I'll never forget, there's a guy named Peter Lynch that was always great, right? You know, he's one of the top financial gurus of all time. You would buy his fund because he's managing it, and he's got a really good eye. He'll go around and he'll shake hands and kiss babies with all these different companies just to see, hey, what do you guys have going for you right now? What's working, what's not working? What are some of the things that you're going to be doing in the future? And, you know, based on his conversations, he's going to invest in that company, whether it's heavily or he's going to short the company saying that the stock price is going to go down. But you've got someone that's basically doing all the research for you, and you're paying this mutual fund a certain fee every single month or every single quarter or every year to be part owner in this fund. So you own a share of the fund. And this is a great way to have other professionals kind of manage it for you. And you could talk to your financial advisor, whether you're looking for a little more risk, less risk, whether you're seeking growth or income potential. And this is a great way to park your money as a senior in 2024. And you know, it all ends in one place with me, because this is something that me personally, as well as my senior mother, we highly believe in the real estate market. The best thing to do if you don't believe me in the real estate market is to go to your local search engine on your computer or your phone, look up any property, maybe the property that you're in right now. Just look at the address. If you look at all these housing sites, what you'll see is the history of what the house was worth. And if you look back 5 years, 10 years, whatever it may be, you'll see there's going to be something that's very common with all of these, okay? And that's called cyclicalness. If you can see this right now, and you can see my line, let's just say you started out buying houses in 2010 here, okay? There's going to be ups and downs, just like interest rates, just like stocks, just like bonds. Everything's going to go up and down. Cyclical, right? However, this is year 3, this is year 5, and this is year 10. What is something that you see here? Yes, it could go up and down. However, if you bought it here and you sold it here, you've made money. Even if you bought it here and you sold it at the down, you're still making money. So real estate is always really good. Whether you're seeking monthly cash flow from buying a house, having $1,000 mortgage payment and collecting $1,500 in rent, $500 cash flow, even with property management fees at 10%, off of that $1,500, you're still making $350 a month on that property. You have someone going out there working for you, delivering $350 to you every single month if you have a good tenant. The risk is if you have a bad tenant and you're self-managing and you're having to deal with the headaches, then it may not be worth the risk. And that's where you can go into something like a REIT, a real estate investment trust. It is where you're buying almost like a mutual fund for properties. Okay, you're buying a share of properties, and this has no hassles of property management, no hassles of anything. However, with all of that being said, the more properties you own, the less headaches you have, okay? And that's totally opposite of what you may think. You may think, wow, if I owned 50 properties, now I have 50 sets of headaches, right? That's really not true, because you really got to look at the good and the bad, right? You know, I own a significant amount of properties. And I would say the headaches are not from collecting rent. The headaches are not from taking calls at night because the AC system went down or something like that, or a leak, or maybe spots on the wall that may lead to, you know, the tenant thinking that there's mold or something like that. No, the issue is the risk, right? And that's where you have a property manager that kind of helps you out. However, with that being said, just like that chart that I just drew, right? My play on all of this is, number one, tax benefits, okay? I have depreciation that I get a write-off on my taxes on my Schedule E. Improvements that I've done to the house, that's something that you can write off in the cash flow. However, this is what I'm shooting for, okay? If I were to buy a house at $100,000 here, put $20,000 worth of work into it, $120,000 in 2010. Right now, this is a real world situation. 13 years later, I've got these houses that I bought for about $100-some thousand that are now worth $250,000, $300,000 because I've been here now. And guess what? If I were to take a mortgage out at this $110,000, and let's just say that the interest rate was 7% at the time, and my mortgage payment was maybe $800, and I was collecting $1,100, $1,200 in rent in the beginning, these rents have now also increased to about $1,900 to $2,300 now. Okay, so over time, my rent has gone up and the values have gone up. And this is why most people that have the means do invest in real estate. And it's a great asset to hold on to, because in my eyes with real estate, my goal is to build up a real estate portfolio and to hand it off to the kids in blocks, right? Each kid is gonna have X amount of properties that they can manage, and hopefully they do the right thing and they continue to build it for future generations and to be able to take advantage of the cash flow or cash out and buy multiple other properties. That's really the hope. But if they ever run into issues or have health issues, then they have each one of these properties that they can fully liquidate for hundreds of thousands of dollars at one time. And that's really the goal. So definitely my recommendation would be to start dividing your assets up into different buckets, okay? Whether it be these 7 buckets or maybe even other additional buckets. Other investments. To me, these are just the ones that I can really think of that I would say these are great for my mother. So with every investment, there is going to be risk and reward. And it's really essential that you carefully assess your financial goals and risk tolerance before you jump into any of these. However, if you have any questions or concerns, you know, on real estate, or maybe even a lower level of understanding on some of the 7 things that I've discussed, you can certainly feel free to give me a call. My name is David Xie. I can be reached at 757-478-8493. If you found this information to be helpful to you, please be sure to subscribe so you could be notified of future videos that come out. And I'm always talking about different investments as well as ways to acquire properties, and I'd love to help you out. All right, so with that being said, I look forward to talking to you. Thanks, bye.